It's only one of the perceived risks. The other is well documented, well discussed, well debated, whether the market's too narrow, whether stocks are too expensive, right? Marco Kolanovic, JP Morgan, says it's worse than 99 in mega cap. Too complacent over risks that are in the market. Commercial real estate, I think New York Community Bank front and center when I think about that. Stock's still under 5. We haven't heard from you regarding that. Are you still holding that stock? And if so, what's your thought process on this whole story?
But just differentiating one quick thing before I get into that on commercial real estate, I really, really don't want us to go there with painting a broad brush or using New York Community Bancorp to paint that broad brush.
You can paint whatever picture you want with New York Community Bank, because it's not a pretty picture. Let's just deal with that.
Let's just deal with it.
I want to know what you're doing with New York Community Bank, please.
So, as you all know, for better and worse, I never react on either buying or selling until I feel like I have enough information to make a smart decision at that point in time. Sometimes it keeps me out of stock, sometimes it gets me out too soon, in too early, whatever. So as soon as New York Community Bancorp announced earnings last week and they cut the dividend, obviously I had to sell, but I did not need to sell then. So then I go into get the information I need mode and try to minimize the loss and figure out what's going on. I have spent the last week so deep in on this and trying to figure out what's the right information and information that I need to make a smart decision. And it's leaked out, right? There's new management, there's a press release. I've had tons of conversations with industry experts. I've understood that there's been message boarders, the same ones apparently, who went after First Republic because they know that if they can take down the share price with banks, a falling share price can become a self-fulfilling prophecy. I've listened to other people in the industry go out there and make really disparaging remarks about the earnings power of the company, because you know what they do? They're asset buyers and they want to buy assets at fire sale prices. So I've tried to let that noise get out and tried to assess what's the right price for this stock and when should I sell it. So I'm obviously selling it. I have to sell it, but I am not selling it at the $4.20 that it's at right now.
What leads you to believe that it won't be lower than where it is now?
Because I think what we've seen, and this is where I was gathering the information, what we've seen is one of the really interesting comments on the call yesterday was he said, look, we're using the street's estimates of $840 million of earnings next year. Whether it's $700 million, $800 million, or $900 million, that's more than enough to run down the reserves that we need, right? We've got enough earnings power ahead. What we saw yesterday, which was super important, was that there is no run on banks, and that's what I was worrying about. So there's no deposit issue because Janet Yellen is backstopping that. And what we saw also was we saw the companies being active in bringing in more management who can speak better and help move this into a Category 5 bank with all those requirements. And so I think those are backstops here. What I'm trying to assess is what's the real tangible book value. A week ago, it was thought to be $10.60. I don't know if it's $9 or $8, but the stock has historically traded around tangible book, right, at or above tangible book, and I just don't want to sell it at 50% of that. So I don't know what the right number is. I know that I'll be out in relatively short order.
How are you going to know when the right number? I mean, how are you going to know? Is there an alarm going to go off?
No, and it never does. We have a joke at Gilman Hill. No one ever rings the bell.
No, I know, but it sounds like you're waiting for.
I'm waiting for the dust to settle. I won't sell it for $4.20, right? I'm waiting for the dust to settle. And
at $6, I thought it was way overdone. I listened to the conference call. I don't know the company as well as you do.
You listened to the first conference call or the second conference call?
Both. That proved to be incorrect because one of the things that came out subsequently, which I think management now deserves no trust, is that a regulator. Their regulator forced them.
Right.
They also quietly got rid of a chief risk officer by taking their name off the website. This is not the behavior of responsible bankers.
But then what you see is more responsible behaviors coming in, which is why Sandro Dinello came in yesterday and really led the call yesterday. So if you listen to the call yesterday, I thought the tone was very different. I think they're stepping up and in to try to shore this up. I'm very, very curious to see who they bring in to replace the chief risk officer, because if it's someone from a really high quality big bank, that's a big statement. I'll probably be out before it gets there. But what I think is it's not as bad as it looks. And there's so much noise from the algos that automatically had to sell on the dividend cut, from the message boarders who tried to create. The message boarders tried to create SVB 2.0. I think this is not, and we heard Janet Yellen say it earlier on CNBC. This is not systemic. This is the case of a small bank that got over their skis when they bought those signature assets. They should have been accretive. And you know what they did that was the most wrong? And this goes to your point of horrible communication.
Yeah.
The thing they did was they didn't bring in more management a year ago with very large bank experience.
Making an argument, though, that, isn't it worse, in fact, if it's not systemic, but if it's idiosyncratic to the stock you happen to own?
Yeah. And so I will sell it. I'm just not selling it here at this price because I think this is the wrong price right now.
Okay.